Welcome to the Charter Member Roundtable series by TiE Bangalore along with YourStory. Our focus this time is on the Fintech sector, finance, banking and other kinds of services. And we have with us 4 outstanding experts from the Fintech ecosystem in Bangalore. Let me introduce our speakers one by one. We have with us Sandhya Vasudevan, a strategic consultant and independent director. She's also the Fintech chair at TiE Bangalore. Welcome aboard, Sandhya. Also with us is Ravindra Krishnappa, managing partner at July Ventures. He was earlier at Erasmic Consulting, AceBot, Oracle and Tata Unisys. Ravindra, welcome aboard.
Thank you.
And also with us is Ramakant Desai, independent managing consultant, convener of the Bangalore Fintech Forum. He was earlier at Happiest Minds and Wipro. Welcome aboard, Ramakant. And last but not least, rounding up this able panel is Balaji Jagannathan. He is the CEO of Evolver Solutions. He was earlier at Logica CMG. Welcome aboard, Balaji.
My pleasure.
So we have around 2 hours or so, maybe less, on this discussion, and I'm going to begin with a few general questions for the panelists, and then we dig into specifics based on their own journeys, their own stories, and their own experiences. So my first question for all the panelists is, what do you see as the areas of innovation in this whole space? It's very broad, of course, fintech, but from your perspectives, what do you see as 2 or 3 key innovations in this area? Sandhya?
Fintech has already kicked off a lot of its innovation in payments and lending. It's kind of expanded into wealth management, neobanking, the traditional spaces. A lot of focus has also been on retail, but I think what's evolving now, from my perspective, is the adjacencies. Fintech cuts across almost any business which is out there. So if you marry it with agriculture, agri-fintech is kicking off. There is effort going on in the context of carbon exchange, circular economy. Fintech has a role to play in that. The third area, which is very active, which we are looking at how do we develop the ecosystem, is mobility. Mobility and logistics, which ties into ONDC and the works around that. There's healthcare and fintech. So there's a whole range of it. I've just touched on a few. Some of it could be blue ocean, some of it would be just purple, but there's also still stuff to be expanded within the existing remit itself.
Great, thanks, Sandhya. How about you, Ravi? What do you see as the different places?
Well, I think it's a fantastic way for India to take a lead in the world stage. And about a year and a half internally within July Ventures, when we were putting together a fund, we spent a bit of time doing a deep dive on this, on what we think is happening and what we think is likely to happen in the fintech space, right? And then fintech also means adjacency of insurance tech and insurtech and payments and all of that put it together. Became very clear that this is a moment for India to leapfrog, both from a technology and a solution perspective. Now, the way we thought about this is that we think the whole, what used to be called as the platform stack, is getting rebuilt. And somebody with a network background will appreciate, I called it almost like the old 7-layer model where you had services at different pieces, right? So at the bottom of that layer, you have things like identity management, right? Pure. So in anything that I have to do in fintech, whether I have to do a payments, I have to do receipts, I have to figure out KYC and identity, right? So that's identity management. Now, if you think about Aadhaar as the base for that, and in some ways UPI is taken off because of that particular solution, right? And extend that with things like PAN that you can use, other numbers or other scores that you can. Next, you have a services layer where you have to almost imagine these as microservices, right? So today, there are solutions where, take somebody like a Razorpay, they will probably be able to give you a complete virtual account and a distribution structure just under that as an API service. So it doesn't matter whether you were in lending, you had something called embedded finance, right, where you would embed finance into your offering. You talk to the people in education, Madan, right? They have exactly the same. If they have to do any kind of education lending, then you have to build that either into the structure, or now the advantage is I will do an API and be able to get that. And as you grow up that microservices towards what I call as macro services. So an example from India is somebody like a ChargeBee, right? So if you think about ChargeBee, all they started off with this concept that I am now having to invoice a set of people based on a few factors that is based on usage. So it's if you think about the old telecom pieces, this was what was called as metered billing, right? I had to, but then I had so many of these offers going on, right? The two of us can be in one small community. We can have everybody in the office belonging to a closed network, etc., right? So what was built as a monolithic platform in the telecom age now is offered as a service in the fintech space, where I just take a list of input parameters, I package that out and generate a bills payments kind of a structure. So I can talk through all of those 7 layers, but what essentially is happening is the digital infrastructure in fintech fortunately has been built bottoms up, which means that you have identity, KYC, the transaction processes, etc., which allows you to use that as a foundation layer and go all the way up. How is that going to come through? I'm sure we are going to, you've already seen what's happened on payments, what's happened on financing that you talked about. We, for example, have agri-financing that's embedded. We have supply chain financing investments. So we'll see all of that coming through. But eventually, I think what is good about it is this is going to percolate to things like cross-border, right? So long term, I'm now going to, of the opinion that some of us will question a few things, like, do I need to rebuild SWIFT network as intercompany interbank process? Can I bring in fractionalization at that particular level, right? So I think the next 7, 8, 10 years or even further, I don't see it actually slowing down at all. I only see it accelerating because the base rails, the base foundational concepts have all been built.
How about you, Ramkad? What would you add?
Yeah. First of all, both the panelists have exhausted what I could speak. But anyhow, let me take a shot at it from a macro perspective, and more so from the context of India. Okay. So if you look at the fintech whole landscape, industry landscape, obviously there has been quite a bit of progress in the payment space and to a certain extent in the lending space. The neo-banking is yet to take off, in my view, in full-fledged way. InsurTech has really not progressed to the extent we need. And of course, there are emerging concepts like, buy now, pay later, etc., etc. But there are different problems to be addressed in different areas. Okay. For example, if you take lending, still discovery is a big problem. Okay. We think that lending problem is solved or digital lending has already taken off, but actually there is a need for another $300 billion of funds required in MSME sectors and in the marginalized sections and other things. Okay, so I mean that means either the lenders have not discovered or the source of funds is not there. The entire value chain has to be addressed in that segment, if you ask me. Let us just take agriculture, like one of the panelists were asking. The credit mechanism, institutional credit mechanism, has reached only 50% even till now. And if you take the bottom of the agriculturists, not farmers who own more than 10 acres, but say people who own less than 10 acres, okay, that percentage is even more. Okay, let alone the high rates of interest they have to pay for the local money lender, etc., etc. First of all, there is an interest arbitrage within India itself. Okay, I as a guy, I can go and get 50 lakhs loan from, say, State Bank of India, and I can go and lend to 10 farmers at 15% interest, whereas I can take interest at 8%, 10%, whatever it is. So there is an interest arbitrage. One is cross-border, and there is an interest arbitrage within India itself. Okay, I think that is very unequitable distribution of money, if you ask me honestly. So I think a lot of innovations have to happen, even if you take, say, for example, insurance. Okay, micro insurance is still not there. Okay, and there are many other areas where a lot more innovation, both in terms of product, as well as in terms of delivery, as well as in terms of discovery, has to happen in a big way. That is the way I look at it. I think banking as a space itself is going through another major transformation, in my view, across the board, not only in India, across the board. If you take global banking, the margins are shrinking, say, from 15%, say 15 years back, or 18%. Now they are shrinking to 8 to 9%, if you look at the traditional classical banks. Okay? So these people have to reinvent their models, because otherwise some of the fintechs are coming away and taking away, nibbling away their shares. Okay, so there are many models emerging. For example, WeChat is trying to become WeBank. Okay, that means they are trying to discover the whole thing. Entire commerce marketplace is planning to be served. Similarly, there are some other models. There is one good banking model which has come in Kazakhstan. Okay, I think some of the Indian banks can look at it, and I think there is still a lot of need for serving the underserved sections in the banking in India. So there is a whole lot of things which can be done still in fintech. I think I'll stop here because I spoke for long.
That's perfectly fine. Great. Balaji, what would you add to? We heard about tech and sectors, etc.
Yeah. So first of all, thank you for having me in this panel amidst stellar people with stellar careers. So the question is about what's the scope for innovation in the fintech space. So I would want to just bring it out to everyone that we are talking finance and technology and coming together to call it fintech. Now, if I took India as a scope to start with, I would say internationally, I believe the banking and finance sector in India is one of the most well-evolved and well-regulated system evolved over a period of time. And in fact, many countries that surround India take cues from Indian regulation, Indian vision, and then implement it. They follow suit quite literally from the finance point of view. And as we all know, from tech point of view as well, for the last 20 years, we have been evolving quite rapidly to be the most evolved sector in the world. So in that sense, the fintech, there's no better place to be than in India when it comes to fintech. And like Ma'am Sandhya mentioned, so when you take technology, finance, both of them apply to almost all sectors that are involved, right? So that's something we cannot ignore. What we have seen so far is banking and technology, finance and technology coming together very closely and very rapidly for the last 10 years at least. So what that has led to is a lot of innovation in this segment involving banking and technology, finance and technology. And within fintech, I've also noticed that retail segment, retail finance, retail payments is what is given the maximum attention to a point where I would say we have leapfrogged and overtaken many of the countries in the world, not just the West, across the world. We are pretty much holding the pole position there in my view, especially with the payments technology. Having said that, there is a lot of segments that are other than retail payments or retail finance that's grossly underserved in my view. Even within fintech, B2B fintech is highly underserved. There is so much that could be done in that space to the point where if there is any bandwidth that is available today for anyone in the fintech space, it's best to go towards B2B segment and try to see what you can do with respect to innovation. If I am trying to innovate in the fintech space, the one thing I would definitely do is to stay very close to the regulation, very close to what RBI is saying, very close to what different industries are saying with respect to finance, right? If it's supply chain, how is supply chain linked to finance today? To what extent that is evolved? And what are the regulators involved in supply chain saying about their vision for technology? And that's how I would play. What it does is, as an innovator, see, innovation by nature is a risky thing, right? You are betting on future. So you need to know as much as you can to de-risk yourself. And the best place to be is stay close to the regulators, the ones who are setting the papers, papers for the future, the vision for the future, and see what is upcoming in that as far as they are concerned. Like for example, if you took retail itself, CBDC was under discussion for almost a year, right? So it was very clear that this was coming, right? Central bank digital currency, very clear it was coming, and there was enough discussion, enough paper that was made available as to what the finance ministry is thinking about it, what RBI is thinking about it, for us to go do some amount of innovation, be prepared, right? So that's how I would approach when it comes to how to scope your innovation, right? And coming back to B2B, most of the B2B related innovation, I believe, lies in how you structure the flow of a transaction. Unlike retail transaction, B2B involves a lot of flows, right? If we are able to innovate in the area of flows, how a transaction flows, how a business process flows, and how can that be improved with respect to the finance side of it, right? That's where the innovation exists. And that would mean, usually, what are you trying to do? You're trying to solve a problem. The problem is in the form of convenience, the problem is in the form of efficiency, resource utilization. These are 2-3 segments where you look at innovation, right? So addressing flows would automatically means you're bringing in efficiency, which also automatically means cost reduction, right? So this is how I would look at innovation as a scope, right? So yeah.
Yeah, I think the last point you mentioned is very valid. You have to find the fault lines in the flow of the finance. Okay, where are the kinks happening? And that's where the opportunity is there for innovation. For example, the other day I was speaking to a restaurant vendor. Okay, he was telling that I supply items for this restaurant and I get paid only after 15 days. If there is an intermediary who can come and pay me for my for whatever I am supplying to the restaurant 15 days in advance, I'll be a lot more happy. I am ready to discount 2% of my cost or 1.5% of my cost. So there is an arbitrage there. The question is, there are many such vendors. Anyway, we can get into entire whole range of discussion.
That's a very good segue into our next question. We have 2 kinds of audiences. One is aspiring entrepreneurs who want to get into this space. We'll come to the second later, which is those who already are in this space and want to scale up. So let's take a look at the first one. There are many maybe techies out there who want to enter the space. There are people from banking, accounting, finance, insurance who want to get into the space. So how should an aspiring entrepreneur get into the space? How should they do problem spotting? We talked a little bit about finding gaps, fault lines, etc. But how do you immerse and how do you understand the ecosystem so that they can build an entrepreneurship opportunity? Balaji, you want to start? Go this way.
Okay, so I would say for someone who is starting new, first of all, I don't believe that you can just start overnight and come and solve a problem, right? You need to have understanding of the space you're trying to be in, right? Simply because I borrow this, from someone, I don't remember the name, but someone said that innovation happens at intersection, right? So what does it really mean? When you have 2 spaces where you have an expertise in, then you know the problem in one space very intimately, and then you have another area where you have deeper understanding, and when you bring them together, you are in a position to solve something uniquely. So what it does is, one, it gives you a good understanding of what you're trying to do, and also it automatically creates an entry barrier for anyone else, because you know both the sides well, and hence you are able to fuse it and bring in innovation, right? That's how it all starts. So naturally, what you need for that is a very deep understanding of the segment where you're trying to, or the industry or industry segment where you're trying to solve a problem, and you should also have the ability to be able to articulate the problem in ways that others have not done so, and identify a solution to that, right? Easier said, of course, but this is how it happens. I believe staying in an industry for quite a while, understanding the nuances of it, being hands-on, or at least having access to people who have been hands-on, those are key, right? So that's how you. So if you are new to it, I would say start off by talking to the experts. Be close to the experts in that industry, whichever industry that you are trying to be in. But be an expert in some area to a point where you don't have many parallels, right? So that's how you are able to give something and also take something from someone. So that's how someone who wants to start would need to approach it. There's no easy way out, but that's what it is.
Great. Find a problem, articulate the problem. In your case, what did you add, Ramki?
Yeah, I think the way I look at it is, there is in any economy, there is a producer of goods, there is a consumer of goods, okay, and all of us forget, and there is a certain amount of velocity for the business to move at a particular speed. Okay, if the producer produces faster than the consumer, he will be burdened with inventory. Similarly, if the consumer is demanding more, inflation will go up. The simple law of economics. But nobody understands the importance of velocity of money. Money velocity is equally important in the whole value chain, okay? And that's what fintech is solving in terms of both discovering new segments, okay, in terms of finding out where is that the flow of money is getting constrained or flow of money can be accelerated. Okay, that essentially is what the digital technologies are solving in the flow of finance, if you ask me honestly. Okay, that's at 50,000 feet. Okay, now if we come down to Mother Earth, there are many problems to be solved in India. Okay, we're extremely underserved insurance market. Okay, like we were just now talking about, there is no if I'm traveling today, I'll have to find out where is that, I have to find my travel insurance. Okay, just in things like that. Just housing insurance itself is around about not more than 3%. Not many educated people insure their houses. Okay, so there are many Western models which can be studied and which can be replicated in India. If I'm the entrepreneur, I look at various business problems, small problems which have been solved overseas in mortgage finance, etc., not necessarily through digital mechanisms. There are physical models, physical solutions which they have found out in terms of figuring out, which can be replicated and found. I'm just making up one of the things. The second problem is, I think the Indian entrepreneur should look at underserved segments in a big way. There is a huge opportunity there, both in lending, insurance, healthcare, property, housing. You take every segment, underserved segments are the best segments to go after, and look at the aspirational community within the underserved segments. That is the thing. If you go to a tier 2 town, don't go to a slum to find out what you can do. But there is a good amount of middle class in a tier 2 town which can be served, who have a certain amount of disposable incomes. How can we serve that? Okay, I strongly suggest that they should study a lot of books in business model innovation. Okay, that will help in a big way. Okay, for example, I was referring to that Kospi Bank. Okay, in Kazakhstan, they have found a very innovative model of banking. Okay, things like that. So study a lot. Speak to many stakeholders in the system. You yourself will figure out very soon where is it that you can put your energies into. That's what I would do if you ask.
That's a good set of recommendations. How about you, Ravi? What did you say they should?
So you made a statement. I think you have two viewpoints. One is from a techie viewpoint, right? So you started your question by saying, how does somebody who is tech-oriented come to that? Now, tech is a given. So let's now start making some statements which are going to say tech is a given, because in today's world, if you do not have the ability to bring in technology for efficiency, for speed, for your ability to go back and be nimble, then you are dead even before you start. Having said that, from a business perspective, what I have seen happen is there are lots of people, especially on the retail side, B2C retail side, they tend to say that I will do all of this. While they follow the workflow, they tend to say I can do all of these services for everybody, right? Now, banking is the whole finance fintech piece is maturing so quickly that by the time you can get that coverage in, I suspect that you're going to have a bit of an issue in the time to market aspect, right? So there are only two ways in my mind, and incidentally, we only do B2B. We only fund B2B. We don't do B2C. The reason we don't fund B2C is we really don't know from a net result of a finance, we don't know where the money is. So today UPI is free. Somebody is paying for that infrastructure, and PCI is paying for that infrastructure. It cannot be free long term, right? There is a cost to some of these transactions that is going to flow down. So within B2B, if you say I'm going to focus on B2B, then you have two parts to your strategy. One, are you touching something in the core that everybody needs that you think I'm going to do very, very well? So I kind of hinted at fractionalization, right? Today, you take an ETF process, you take a listing of a bond process, you take any, I'm not talking about the retail side, I'm talking about being a service provider to a bank, right? You are a B2B where a financial institution is your piece. Then how do I build that? So I'll give you an example, that throw light. We are invested in a company that does alternative credit score, right? Uses AI, uses machine learning, uses game theory and psychometric. So before you get a loan, whoever is your loan provider will ask you to play a 2-minute game. At the end of it, you get a credit score, right? It's an alternative. It's not a rating, it's a score. It's a psychometric score that you would do. When we did our analysis, we found that until today, even if I were to do this on a manual process, because they had time to think and they would go in and fake the answers, etc., the correlation was never more than 60-odd%. We are starting to see 94%, right? But I can't pitch and position this, or the founder cannot pitch and position this until and unless the founder understands the whole depth of credit scoring and what is an alternative credit score, right? The business piece has to be. Now I call this as a core. Why do I call this as a core? This then becomes a filler point for anybody who is offering this on your other side, right? It could be agri loan, it could be student loan, it could be SME loan, right? And it has the foundation of AI and ML and game theory and psychometric. Another way of approaching it is to go in and say, I'm coming at a peripheral, but I'm going to do it so very well that I am going to succeed in that particular space. Again, example, we are invested in a company that does agri-input finance. The way we liked, the reason we invested in him is not because of the tech. Technically, he was running off Excel. We have now moved him into a platform, right, or Google Sheets. That's all he had when he started off. But he's got a very innovative business model that you talked about, where he has taken off all of the things that came out of the microfinance structure of lending to where there is a community backing into the lending process, right? So he's working with FPOs, working with community lending structure. Now for us, that's a mode, right? It's a business mode. This technology is one part of it. So you have to decide as an entrepreneur, are you going to go deep and find this gap? And the gap can be found both in the core or it can be found in any of these peripheral answers, right? As the value chain. And you'll see this across the board. There are guys who today started off as just pure KYC providers. Today they are funded well, growing very, very well. And what they bring is this whole thing where you had all of these gig economy guys who had to do KYC, right? You had Zomatos, you had not just the gig economy, the marketplaces that had to do KYC. So you had to do a KYC of a small restaurant. You have to do KYC of a taxi driver. You have to do KYC of somebody who's running a bounce scooter, right? How do you do this at mass scale? The larger companies didn't go and build this. It were the most nimble people who went and said, now this is going to be a requirement. I have a full end-to-end onboarding and KYC structure. They're doing very well, right? So the opportunities, I think you have to start not from a technology perspective first. Start with where the real problems, and the problems today are not just only about efficiency, it is also going to be time to market.
Great. Sandeep, what would you add to this?
I think it's a really interesting conversation. If I were a person wanting to get into this space, and I was just scanning the list of startups that I'm engaged with, and not many, I just picked the 10 or 12 that would be relevant for this conversation. About 6 of them have been created by people who do not have depth of anything. They are young people who are probably just a few years out of college. Some of them may have had, okay, I've spent 10, 5, 7 years doing law, doing X, Y, Z, but they don't have deep domain expertise either in finance or in technology. Some of them, whereas the other set have deep experience either in the financial space or in the technology world. But what they all have in common is what Ravi said. I identify a problem, whether it's in the flow or whether it's in the intersects, as both Balaji and Ramakant have mentioned. But I think what is more interesting for me was how they broke it. They looked at it in terms of business model. They looked at it in terms of other new kinds of partnerships that you can create, which are very different. They looked at it in terms of, is this a new way of solving that problem? Others have done it in ABC ways. Can I look at it very differently so that, to Ravi's point, Is it faster to market? Is it easier to do it? As a consumer, is it making it more uncomfortable? The other bit they looked at, from what I can make out, is how difficult is it from an execution perspective? How is there additional value-added services that you're providing as part of this exercise? Is it making it, who are the stakeholders in that system? So if you take something like agri-tech, it's not just the farmer and the FPO. You're also looking at what is the government gaining out of it? Are they kind of increasing the GDP in that area? You then look at it in terms of actually the customer experience, the full channel to market, all of that. So going back to, if I'm a new person coming into this space, I would personally do two things. Is there an area that I feel passionate about? Okay, I come from a farming community, I want to see, I see this, can I solve it? Or I come from a middle class community and I see, oh, the headache of the road and sitting in transport, can I look at something like, it doesn't matter what sparks your interest, but is that interest strong enough to look for solutions? And then do you find, is it already solved? Which means it's the red ocean, you already have lots of people in that area. Or do you find spaces that others have not gone into? If you find new areas that others have not gone into, there's a greater chance that you will be able to move it forward, provided you identify both the technology and the financial aspect which need to go with it. So I think it's not one or the other, but because we are talking about fintech, there are two things that I think that needs to be kept in mind. They need to understand, when you're dealing with tons of money, all national government cross-border requirements, there are laws that have been in place for quite a few hundred years now. Many are changing, many are getting challenged. But you need to keep in mind, they were put in place in the best sense for two things. How do you safeguard the country? And how do you safeguard the retail investor who may not have the detailed, sophisticated understanding of financial products and solutions? That's the role of the regulators. They are not there trying to put barriers in the way you work. So my view around that is, how can you proactively engage with them in order for getting the changes that you want done? In 2014 or 15, I was sitting in RBI. They had, the startups coming and sharing, and one of it was peer-to-peer lending.
Right.
And I won't mention the name, and they were using exactly psychometric testing for making sure, will this person repay the money? And they had a very simple model. And if I wanted X amount, they had targeted who they will give money to, and they said, you can all pay the money, only X amount, so that it's not loaded. It's a consortium lending.
Right.
It was not legal under RBI. But the presentation was being done to that group, and RBI was asking them to do things which they were asking the banks to do. And then these guys turned around and said, you haven't made it legal for us to do these things, so we don't have access to it. So what we need to keep in mind is they are open to the dialogue. They may still be constrained by not allowing certain things to happen at a certain point in time, but they are very open to the dialogue. That's been my personal experience.
Great, Sanjay. You gave some very good specific examples. Let's turn now to our second set. You want to add something?
Yeah, no, actually I wanted to add. I mean,
yes.
observation gives a lot of ideas. See, for example, current generation doesn't know. In the olden days, when we had to go and buy a fridge or TV, there used to be installment models. That is nothing but now BNPL, if you ask me, in a way. Yeah. Okay, our car, we always bought an installment model, at least the middle class. So can you replicate that in other sectors? For example, travel now, pay later. I want some youngsters want to go to Switzerland, enjoy their honeymoon vacation and come back. But when you are just starting your life, you may not have enough money to go to Switzerland. Okay, so can somebody think around that? I'm just telling you. So it's just an extension of BNPL model.
Yeah. So the two pieces. One, in some ways, you have to be ahead of the market, right? So if you take BNPL, I will argue that the train has already left the station. right?
Yeah.
I'll
I
argue
mean,
that.
not across domains. I mean,
Correct.
see, it may have addressed in one domain. There are a lot of opportunities in other domains. That's what I was
So
saying.
the variations are definitely there in terms of what I want to do. But take that as a combination, right? Now we take a combination. You talked about P2P. You talked about BNPL, right? Today, really, most of the P2P players have a very, very odd problem. And I'll tell you what this odd problem is. People realize. There's more money than people to borrow in P2P companies.
Yes.
I'll make that statement again. When we
Yes.
talk about credit offtake, we don't have money, you don't have thing. If you go and talk to most P2P players, they will tell you that they have more investors, they have more money than validated leads that they can lend.
Yeah.
There are lots of leads coming in, right? I'm sure
Spot on.
you know
Yeah,
this,
yeah.
right? So it's not a question of what was traditionally thought of as a problem, right? The money lenders in India always had money. Please understand, they did what Muthoot does now, where I'll say I'll take gold and do, right? The digi-gold structure
Has been
traditionally has existed, right? You have to, or we're evaluating where we'll probably go in and look at somebody who can go in and figure out how to do a chit fund model, right? The model has always existed. But there has been no transparency to the statement of RBI. There's been no compliance.
Yes.
Most of the chit funds have had an issue not with a license. They all have license. It's the compliance structure that you can go back and work through. There's no guardrails for any of these people to go and figure this out. The NBFCs have always existed, right? They are all regulated. But if you see where the fall-offs are in some cooperative banks, even in Bangalore that you hear, it's not because of the rules, it's been in spite of the rules, right?
Yeah. Yeah.
So structurally, I think somebody needs to start, the people that you are talking about, the entrepreneurs need to talk about how do I build this and stitch this together as quickly as possible.
Yes.
So take CBDC as an example, right? I am one of the first guys who have the ICICI Bank CBDC wallet on my phone.
Yep.
Unfortunately, I can't use it anymore. Who do I pay to? Right? They have not enabled UPI payment on my CBDC wallet. So my CBDC wallet, I have digital wallet, I can show you, it has money. I don't have anybody to pay to.
You just wait.
Yeah? I have to wait for my receiver to receive this piece, or they can do a QR code, I have to scan the QR code. But is there a need for it? Absolutely. Because if you are in the basement of any place where you have to pay off on a GPay, you are stuck somewhere, you don't need connectivity. I can put out on my wallet. So in fact, I wrote a blog on CBDC about a month and a half ago. It's on our website. If people are interested, they can go take a look at it. Where I very clearly said, don't go by what you think is happening today. Go by what you think the future will look like if you had some of these things sorted. Right? So the point I think I'm making is we are all raising individual pieces as we see as our view. The entrepreneur that is going to make this a success is going to say, this is how I can package this and go deep very quickly.
Good. So our second set of audiences is those who already have a product most likely or a service. I know the challenge they face is scaling up. So what are some of your thoughts, examples, stories from your portfolios or your own companies on what are some good parts to scale? Sandhya, you want to start?
Okay. If you already have something and you believe you're making reasonable amount of revenue, I think the classical approach is, do you have the right set of customers? Can you increase your set of customers? Who are they geographically or segment-wise, whatever it is. But once you've exhausted that set, who's the next set of adjacent customers that you can go after with the same type of product? I think we spoke about it just a few minutes ago. Yeah, I've looked at it in the travel side of it. Can I now look at it for, I don't know, hospitality, which then goes into actually the healthcare, because you're again staying for a longer time. You know, you expand that kind of, you have to think about expanding your market space. Your market space, your customer base, and a very, very sharp focus on, is it still adding value to the customer? if your customer does not perceive value in however fantastic your solution, it's not going to fly. So if you're scaling up, first principles according to me, does your customer get value? Can you find the adjacencies again and again and again so that you can expand your market space? And can you, to Ravi's point, get there faster than anybody else? Because today's thing is, if I have an idea, if I don't have it out there acquiring customers, somebody else is going to do it faster than me. And that's a reality. And I can tell you it's true of traditional businesses as well. You know, we have enough examples of that. The second bit, I think if I were them, on a scale-up basis, they do need to get a right set of advisors, partners, employees, doesn't matter who. You need to build that bench strength of people who have competence on how to grow the business. So it could be for client acquisition, it could be for scale execution, it could be for, I think you had mentioned it in a different context, governance and how do you manage that? Because fintech is a financial space. Nobody goes into it saying, I want to make a mistake, I want to cut corners. I mean, logically, most of us want to do the right thing. But you need somebody who tells you why the government is doing what they're doing and why we should take it. But associated with that, to Ravi's point, is this futuristic? If you listen to Mrs. Nirmala Sitharaman's sessions, she's been talking about green fintech. I haven't seen much literature on that. Even the definition around that is a bit vague. And what's even more scary is if you just go back to very fundamental aspects of, we talk about scale up. I haven't found that much solid literature on what is the technologies that are being used in fintech. If you ask me, I'm more familiar with what can I do with blockchain, what can I do with quantum, which is not fully being used in India. So if I'm going to get talent from schools and colleges today who will be in the workplace in the next 5 years, what is the competence that you need to build in for scale up? Do you have the capability? And I'm not sure we're doing enough around that. I know of only a few handful of colleges and institutions which are seriously thinking about what's the fintech curriculum going to look like today. You need people who are going to solve problems cutting across disciplines. The old approach of, I'm a techie, I know my thing really well, doesn't work anymore. The best people will be cross-disciplinary solution creators. So for scale up, you need that as well. Last but not the least, if you're scaling up, be very, very, very clear about what your value systems are. What is the country you're creating? You're laying the foundation of that. Ravi mentioned it in the context, what you did in the previous time is not going to be what you take forward. We have an opportunity to create a transparent, well-governed India. And I'm sticking with India. This holds good across, the world as well. But if you see, the financial sector has come under a lot of scrutiny over the recent past. Fintech has the opportunity of cleaning it up, at least for the average person, in a way that nothing else can. So that's going to be, for me, an essential character requirement for the fintechs.
Fantastic. Thanks, Sanjay. Ravi?
First and foremost, again, very, very deeply involved in trying to figure out our challenge is going to be talent. We are starved of good, reasonable talent who have an application mindset, not either a technology mindset or not I would even go to the extent of saying not a pure process mindset. Right? What do I mean by that? Just a couple of days ago, I heard that in India, a tier 2 bank is going to replace their back-end system, which I can name because that, I'm not naming the bank because that's public domain. It's 160 or 180 installations that they have. They're going to replace Finacle. Okay? Now it's an Indian banking product being replaced. But if you think about it, just a decade ago, Finacle was out in the market replacing the Temenoses of the world. Right? Who are the market leaders in that particular shape and form. That is a significant movement in how I can work through. but the fundamental difference is that talent pool that got created in the service industry when it comes to tech, which was done 15, 20 years ago. I mean, I'm part of that, right? I was running an ERP company. What a lot of them have not realized is that the world has kind of zoomed past them, where they are still stuck on where is my QA system, what is my process documentation, where I'm going to do. The maker checker process still exists, but it is no shape and form of what they would have seen. You know, maker checker was traditionally everything that you did testing on was maker checker, right?
Yeah.
This is a place where somebody does all the input and somebody else checks whether the input has been correct, right?
4i, 6i.
So this was a well-established process. And all quality processes, they would take 6 months to make you pass through one maker checker process. 6 months. If you have to do check signature, you're talking about a deployment that takes 6 months to get it through any bank,
Yeah,
right? It doesn't
yeah.
matter what kind of bank it is. That has completely changed. So somebody coming in with that thought process is completely. So first and foremost, I think going to Sandhya's point of talent, we have to do a lot more in getting that talent. We don't teach about finance at all in our colleges. In fact, one of the things that I was trying to put out is how do we get everybody to talk about what is the basics of finance. And you'll be surprised that if you go and have this conversation with a new age, so somebody like a Zerodha, right? I can guarantee you, if you look at the stats, most of the day trades are with the less than 25-year-old.
Yep.
It is not with the older guys who've been there trying to do that piece. The growth is coming from there. The disposable income is taking place there. So people who have that need to figure out what is a future trade, what is my position, is there, not the guy who is sitting in a corner with a CA degree, right? So talent, I think, is the biggest piece. If you manage to somehow get to that, the next step I think you have to get to is another T, which is trust, right? So going to Balaji's statement of B2B, right? India is a place where I still need a big bank name as my customer, right? I may have the best technology, I may have the best process, but our cost of sale or the time to sale is an incredibly heavy one. And the larger the bank, especially if it's a public sector, you are going to take 6-8 months for you to at least get to make a presentation to the board, right? So you need that particular piece of how do I build this trust very, very quickly. Do I go and partner with, you mentioned RBI. RBI has a sandbox. Do I go and partner with an RBI sandbox, right? Do I go and do a co-creation with somebody who is already in this space,
Yeah.
right? On the payment
Absolutely.
side, there's a whole lot of piece. Now you still have to watch through this piece, right? I don't know if you saw Federal Bank just had a piece with a bank card issuer where there's RBI is coming down heavily because it was not thought as a co-creation. It was thought as a deployment of somebody else's rails, right? In my mind, all you had to do was to focus and say, am I going to co-create this process? The same thing happened with, you read again in the papers, SBM, say not Mysore, the State Bank of Mauritius, had a few questions on LRS structures. Why? Because they did not spend time to work through with somebody and say, how am I going to co-create this particular process? They came in, they said, I need this process, I'm going to take it from a smaller company. So for scale, you need this trust because otherwise you are going to get into a position where you are trying to defend that you are good, right? And the only way you can defend is, I have a list of resumes that we tend to do, say so-and-so has 25 years of experience. I have this piece, you have that particular. That is not, in my mind, that's not going to help you scale at all.
Okay, talent trust. What would you add, Ramki?
Yeah, I think before thinking of scaling, first I would like entrepreneurs to look at the market size they are trying to address. Is it a reasonably big size? Otherwise, just like that, aiming for scale and what are the constraints for scaling also need to be thought through. And also, any scaling up strategy differs from B2B to versus B2C. In a B2C, typically it requires a lot more financial muscle, especially because it needs a lot of marketing spend in the digital marketing and a couple of other areas, and to be heard, known, and listened to. Whereas in B2B, it's mostly relationship building as much as possible. And unless you get your relationships piece sorted out, okay, it's going to be extremely difficult to scale just like that. So I think, they have to conceptually think through, okay, and also they should, the third factor they should look at is economies of scaling. While you are scaling, you should also build economy into the scaling model. Quite a few failures which we see currently, where people start chopping off people. Yeah, hire 10,000 people today, tomorrow I'll fire 5,000, happens because they have not built economies into the scaling model, which is very extremely important. Like, when we were building up our services business, from 90s and till 2010 and 2015, that was one of the key factors which we were always paying attention to. Okay, we wanted to expand into Japan, but it would have required $5 million of investment. Is it worth it? And what is the ROI? The ROI is not worth it at all, if you ask me. Then we said, no, we'll just start with some partners there. So partnership, where you have to form partnerships, where is it that you will put your own money and your own resources for market expansion? I think these all become important. And of course, what Ravi mentioned, the branding and the trust factors become equally important. Last but not the least, as you scale up, the quality becomes extremely important. Not only of the process, if it is a B2B, quality of the process. If it is a B2C, quality of the product becomes important. Why I stress on that is because after beyond a point, it is your product which speaks for itself, and that scales in its own way. So to that extent, certain amount of certifications, especially in fintech, at least RBI has introduced its sandbox mechanism, which is very good. In fact, they are also laying down a process for digital bank licensing now. First, they will issue a preliminary license, then only when you go through sandbox mechanism, then you can get to the full-fledged digital bank license, which is very good. So to that extent, whatever are the certifications which are there, I think they have to get them done. It may cost money, and I'm sorry, I told 2-3 times last but not the least. There is one more last but not the least. Okay, is the finance which you need for scaling, which is very important. If you don't plan for finance, and any fundraise, especially for scaling, is a 6 to 9 months process. So you have to plan that much time into your this thing. So you please look at your cash flows. Ensure that you have sufficient cash flows for next 6 months before you plan your fundraise. And fundraise is a very, very, very big activity in a startup journey, founder's journey. I think they have to pay extra attention to that. Yep. Sorry.
We'll come to that later, but yeah.
Sorry.
Go ahead, yes.
Okay, so I'll try to use my own experience to speak about what's the best way to do this, is what I think. So once you have come to a stage where you have a few customers, right, what are your assets? I would say your biggest asset is your customer and the customer's opinion about you, right? What does the customer think about you? So it's important that you ensure that your customer has got great things to say from his heart, whether it is B2B, B2C, whatever it is. This is your root. This is on which the entire tree is going to grow, right? So that has to be very, very strong. With that, you have the fundamental requirement to scale, which is reference. There is no customer acquisition strategy that is better than reference based. It's the cheapest and the quickest and the strongest form of customer acquisition that you can ever have, right? So what does that lead to? You are going to get a lot of leads from your existing customers, or at least when you take a new customer to an existing customer is going to quickly give a reference, your onboarding cycle is going to shrink. Now when that happens, the next challenge you have is to keep the same level of reference quality, which means that when you acquire new set of customers, you should ensure that they are also turning it to the same level of quality reference base for you, which means that your delivery mechanism that you had till then is not sufficient to ensure the same level of quality as you grow. What it means is you need to anticipate, preempt, and build your delivery capability, which comes to talent. And like he mentioned, talent acquisition is not easy. So there I think we need to innovate, right? The biggies of the world like Wipro and Infosys, they have built huge campuses to train talent. And they did it for a reason. which is what I'm talking about now. So you need to be in a position to anticipate and acquire talent ahead in order to be able to maintain the same level of delivery quality, right? If you have to do that, you need to be innovative, you need to engage with universities, you should be able to give your skill set requirements as a part of their curriculum or a part of, a minuscule part of your curriculum at least, so that whoever comes out of it is in a position to deliver what you want to some extent from where you can carry on. That comes to the next thing that he spoke about, which is the fund. When you know your reference base is strong, you know you need to anticipate and get talent, you know that you need the money for it. And you can also predict it because your reference base is strong, you know you are going to grow. So to that extent, your ability to raise funds is less risky. At least you know you have the potential to grow in spite of whatever be the industry or the market be, the economics be, right? Whatever be the economics, whatever be the market, there's always a need. And if you are the best in the business, there will always be demand. So in all that context, you will have customers. If you have customers, you need to have delivery. If you have delivery, you need funds, which means that you need to raise funds year long. So the fundraise is an year-long activity, especially for an entrepreneur, because you're constantly going to need funds in order to grow, right? So this is one side of it, right? The other side is, if you are good in a particular business, the chances are high that all the adjacencies are also reaching out to you, or at least they are opening up to you, right? If you are, for example, if you are very good at B2B fintech, right? It's not too long before someone from the lending space would, from payment tech, from lending space would reach out to you, or it would be very easy for you to expand and extend into that space as well. So you need to start looking at what are the adjacencies within the market offering that you can offer, where you can expand your base. That's one. The next is geography, which again he touched upon. So there the challenge, as he mentioned, is how do you enter a new geography? Do you spend all the money, build the same level of might, build a new reference base, or you go with a partner? Each one has its own consequences. If you go with a partner, well, your success depends on that partner and his or that partner's credibility. How much do they already carry in their kitty? Are you a primary partner for them? Is he going to take your product and your solutions as his primary objective to the market, or are you going to be one of the many that he carries around? These are the challenges that you face. It may sound like quicker, but it's as good as selling to a customer, because you need to first train, educate, develop enough interest in that partner in order to be able to be the topmost item to sell. And then with all of that, the partner is also going to ask for an arm and a leg because he's got access to that market which you do not. So are you willing to work as a secondary resource to the regional partner with all the technology and all the capabilities supplied to them, and them just having access to the market gives them the lion's share of value? Or do you put all your money, all your risk, drop some of your current bandwidth in what you are already successful in, go sit there, create your own bandwidth there, and then start from scratch? Both are, equally challenging, but you need to take a call basis that, right? So, and then of course, I would say, I would drive all of this through numbers, right? Numbers are what tell you where you are, right? It's almost like a measuring tape that you have to measure, a length. Without numbers, you do not know what decisions you are making. Hiring decision, firing decision. Why are you hiring someone? Why do you need that person? What are you anticipating? How quickly can you realize the value of the money that you put today in order to find results in the future? The time difference between the expense and the corresponding income expands the risk as well.
Exactly.
So are you tying your expense to a corresponding income which is near term, or are you tying an expense to a corresponding income which is longer term? And if it is longer term, how are you tracking this? How are you ensuring that money that you put today is definitely producing result 1 year from now? Right? If not, it's money down the drain, and you yourself have lost count of it, and it sits in your balance sheet in the form of capitalized asset, which is depreciated over a period of time. This is what happens.
Yeah, and especially anticipation of risk is very important when you are trying to scale up. Okay, people forget. For example, when I take Byju's example here because it's a classic case known to everybody. when Baidu scaled up, they thought that the market is going to remain the same. The pandemic got over, all K-12 students started going back to their favorite teachers in the next road or next cross. So 50 to 60% of their online market suddenly disappeared. Okay, so I think you have to anticipate some risk. I don't mind scaling up, but suddenly what happens? So you should plan for geography risk, event risk. Risk management is a very important factor when you do scaling up. Otherwise, you are going to burn cash and burn the bridge, complete bridge.
So we talked about the market, the business, the technology stack, etc. Let's talk now about the inner journey of an entrepreneur. So many of these entrepreneurs start off small, now they become leaders. Suddenly they have to become new kinds of people. They have to speak business language and tech and regulation, be seen as responsible people and visionaries. So all this is a lot of pressure for someone who's never been a leader before. So maybe starting off with you, Balaji, what were some of your own experiences as becoming a leader? What are qualities of a leader, and how do you manage this internal and external space?
Okay. So whatever you listed are the ones that make the journey of an entrepreneur as exciting as it is, right? It's a permanent learning journey, right? I mean, what can be more exciting than each day walking into your office and finding that you're solving a new problem, or preparing yourself for an entirely new future? It cannot be more exciting than that. Imagine, contrast that to walking into an organization, doing it day in and day out, meeting the same customer, addressing the same or very similar issue, or just having an incremental change to what you do, etc. Right? But having said that, it's one of the most energy sapping experience. Sometimes it feels almost as if you are sprinting. A marathon is easier when you run very slowly. A sprint is very tough if you have to cover the same distance in a sprint, right? So that's the kind of feel sometimes you get. But again, if I have to pick from my own experience, which I believe more comfortable doing, you get to learn different aspects, right? You have to learn technology, and you have to stay close to technology as much as possible all the time. You have to learn finance, right? And when I say you have to learn finance, you have to learn practical finance. Knowing balance sheet, knowing P&L is one aspect of it. Knowing cash flow with your money on the table is an entirely different ball game.
Completely
right?
different.
When you say finance, I mean that finance. When you sign off on a salary for an individual, right? Your interviewer comes and says this person knows this and this, whereas we require this and this, and his cost is so much. He already has an offer in hand which is this, and we have to offer at least 50,000 extra. You are making a decision by converting a qualitative value into a quantitative value and taking a call, right? And that call has futuristic result. The right or wrong of that decision is known to you over a period of next 2 to 3 years. Imagine you going wrong in that decision. You are living with that wrong decision for the next 2 to 3 years, right? Imagine going right with the decision. You are enjoying the benefits of that right decision for the next 2 to 3 years, right? So there's a lot of subjectivity which you have to convert into objective decisions. So decision making is the most important aspect of an entrepreneurial journey. The more of the big decisions that you get right, the more successful you become, right? The fewer of the big decisions that you go wrong, the more successful you become. So that's how it works. And people management. When I say people management, I'm not talking about just interview and stuff like that. Understanding the human aspect of, especially from the tech business, understanding the human element of your people, right? You don't have machinery, bad quality machinery or bad quality raw material, you just change it. But humans come with their own emotions. They all have comfort zones. They all have spaces where they are very good. They all have spaces they are not very good. Someone who is very good for the last 2 or 3 years is not so good today because the situation has changed. The role has changed. The requirement has changed. But this person has given 3 years of his life to you. Many a times he has worked all day, all night to deliver what you asked for. Now today you find that he is a liability and is not there as much asset as he was before. What do you do with this person? Do you let him go immediately? Do you hold on to him? Right? How long do you hold on to him? Because the more you hold on to him, the cost is also higher. What are you going to do in these circumstances? These kind of decisions are what you get to make as you go through the journey. And you learn there is no right or there is no wrong. If you are a good leader, you are in a position to influence them to expand their skill base so that they continue to be useful for the organization. If you are not, you are probably going to struggle to implant in him that they need to expand, they need to push their envelope to learn more in order to be valuable. Then you are having to make a hard decision. So these are, I could just touch upon a few of it. Of course, there is a lot more to it, but I would say those who could make good decisions, learn quick from the wrong decisions, be able to delegate what they have learned. This is another important aspect. I'm sorry to be taking a few extra minutes. Delegation is very important. We spoke about expansion. An important aspect of expansion is delegation. If as an entrepreneur, if as a leader of the organization, I am still stuck with what I'm doing with the 10 customers in the geography that I'm in, there is no way I can go look at even attempt a moonshot activity, right? Jeff Bezos said that I'm always looking at 3 years ahead, right? What my organization is going to do 3 years ahead is what I'm focused on. If he is doing that, he's definitely not looking at the day-to-day activities, right? So if you are doing something today, are you in a position to move all of that you do today to the person next in line and comfortably see that this person is able to handle it as good as you are or you could? You can't go look at future. So expansion, delegation is a very important aspect of entrepreneurial journey. Of course, there are more to it, but I would stop there.
Ramki, any thoughts? Delegation, learning from failure, we heard some very good.
Oh, yeah. I think the first thing which entrepreneurs will have to learn and transform themselves, I would say 2 words. You have to become responsible and accountable. You have to become responsible for the people who are with you, number one. You have to become responsible to your customers. You have to become responsible for your investors. You have to, so taking responsibility and owning responsibility along with accountability is the first transformation which they have to go through personally as they go through the journey. I have delivered a product to a customer. If customer is complaining, I need to become accountable. I need to go and own up the mistake or otherwise correct it. So if I don't get those 2 things into my framework, I will not end up being a good entrepreneur. That's one. And because you are responsible for your people for the simple reason that by the end of the month you have to write the salary check for all the 25 guys or 30 guys whom you have hired. So that should trickle you every day morning. Hey, I have to write salary check for 25 people. If I don't get the salary for these 25 people, I'm in a way responsible for their livelihood. So it's a big responsibility which you are taking when you are trying to start a journey and becoming accountable. And that the same goes with customers. Okay, I mean, when you deliver something or when you commit something to a customer, you have to ensure that you deliver and meet by your word becomes your action. Your action becomes your word. If you don't marry the two, then problems start. You go and commit something more than what you can deliver, and suddenly you come and find that you can't deliver. That's not good. You are not a good entrepreneur. You can be a cheating entrepreneur, that's different, but you're not a good entrepreneur. And the second thing which they have to learn as they go through various stages of evolution is transition management. He touched upon some of those aspects. Transition management includes coaching people, empowering people. So in the initial stages of your team, you may have to direct your team. At a later stages, you may have to coach them. At a third level, you may have to empower them. At a fourth level, you may have to delegate it. So that matrix they have to figure out. When is it that I need to direct? When is it that I need to coach? When is it that I need to empower? Draw the boundaries. When is it that I need to completely delegate? Just by defining the market space for you. I think that getting that framework in your mind is extremely important. And third thing is, you are just not an entrepreneur in your own right. You are also a legal citizen of the country. So being legally compliant for your organizational activities, not only for your own activity, for the activities of your employees is extremely important. There are many places where I have seen some of the employees getting into, because you are not a large organization like say Infosys, wherein you can bring the might of the system to kind of take care of some of the social issues which are going to come with it. Okay, so you have to be a little bit conscious, and hence building that consciousness into your team becomes extremely important. I would say change management is extremely important. Not only empowering oneself with various facets of knowledge, whether it is finance or whether it is, those things. Okay, anybody can learn. That's as long as you have got a reasonable IQ. I think that's good enough in my view. But I think bringing the value system, having the emotional stability, being responsible and accountable are the four most important characteristics.
Right, thanks. Ravi, you've seen a lot of entrepreneurs from your portfolio firms, etc.
Sure,
What do you
sure.
see
I've
as
seen
the-
both extremes, things that have done very well, things that have fallen apart. So I think what Balaji said in terms of those characteristics are what you're looking for, right? In some ways, you need to be ready to take on that, and as part of your journey, you need to be ready for that particular piece. And the point that he made about, Ramakant made about delegation and putting that boundary of where will I direct and where will I delegate, coach and work through are all valid. But going back to the question that you asked, you said what is your inner engineering that you have to do, right? If I were to go back and figure out and try to kind of encompass that into a couple of words that we can go back. First and foremost, to be in that state, I believe you have to be insanely curious, right? If you are a kind of person who is not curious, insanely, I'm calling it insanely curious, because it's not curiosity, oh, I need to know, this is interesting, right? You need to be able to dive in very, very quickly. Because, I'm not expected to know all of cash flow, right? But I need to be very curious to very quickly go back and say, what's the point? If I'm going to interview a person, I will obviously not know as much as what the other person knows, because that's the area of expertise. But I should be able to at least have the curiosity to go find out, to say, if the person is faking it, how do I differentiate, right? I need to know some base level, and for that you need to be insanely curious. In the sense, you need to know aspects of every other piece that you are going to touch. That's the key. The second word I think I'm going to throw at the table is ego management. Entrepreneurs, by the way we are built, and I can claim one because I've done 2 startups. Way we are built, we are egotistical to a large extent. Right? We believe that we can change the world. The whole reason for us to enter this market is because we believe we have the power to change the world. But that comes with a negative that you have to always be working through. Every time I have tried to go make a sale where somebody has said no, it's a hit on my ego. Every time you are making an offer to somebody and the person says, hey, I don't think you know this, or I don't think you guys are going to do, it's a hit on your ego. In some ways, this is part of the Indian psyche, that we don't know when to ask for help. So if there is one thing that I want people to understand, that it is okay to ask for help. Right? It's okay for you to say, I don't understand cash flow. I don't understand this piece. Please come, can I have some help with that? We have an innate hesitancy to kind of let people know that I don't know this, I'm coming out and asking for help. Right? So, 2 ends of the piece, you need to have enough ego to say, I'm going to make this work, right? But you also need to know how to pare it back and say, I don't know what this is, please help me. Extremely difficult balance for most people, and that's to your point of Indian engineering, right? How do I train my mind to be able to do that flip? It's very, very difficult, right? The same thing happens with curiosity, right? I can go back and say, I know this better than you. That's not the point. The point is you're interviewing the person to see if the person can come in and shape up to your shoes, right? So these are 2 things that you have to keep flipping on both ends. Very difficult, and you have to train. There's no easy solution to that piece. The only other piece that I would like to make a point is that most of entrepreneurs that I have seen need help on finance. Right? Not finance as in fintech, finance as in understanding my cash flow and managing my cash flow. Unfortunately, our assumption is accounting is finance. Accounting is not finance. Right? You have to go back and understand that there is a concept of a controller who's very different, because most cases the entrepreneur is acting as the controller. Then there is the accountant who is doing the book entry kind of stuff. The whole thing that gets left out is the process associated with cash flow management, trying to go figure out where I'm going to source something. The whole associated piece of financial management is somewhere where, and for some reason, we hesitate to ask for help.
Great. Sandhya, you worked with startups, with social entrepreneurs, you were at Deutsche Bank, Thomson Reuters, so you've seen leaders of all different types across the spectrum. For an entrepreneur, what are some of the leadership challenges and issues you see?
I'd go back to the first principles. They need to know themselves. They need to know themselves really well, because and I totally agree with all the points made by Balaji, Ramakant and Ravi. You have an idea. You believe that's the one that will transform the world. You have to believe in it insanely. If you don't believe in that, you may not be able to stand the journey. So do you have the resilience? And if you don't have the resilience, and the other bit is, do you have the risk-taking appetite for what it means? You may lose your shirt, you may lose your whatever else it is as you go through the journey. So if you don't have the self-awareness at the beginning of that space, and you don't make the effort to understand yourself, you're in there, half not. One of the things that I find when I do a number of mentoring exercises, they are tinkering with the idea. They like the idea of being a founder, but they're not really all in. You need to be all in. And for that, it requires a certain degree of, I believe in it, to your point of being insanely curious or insanely committed to what you want to achieve. The second bit is, do you really have the ability for the feedback loop? To Ravi's point, yes, the average Indian doesn't like feedback. I want to be told, even when you do the report card for your financial quarterly returns, you want everything to look green. Reality is, you will have reds, you will have ambers. Do you have the honesty to look at it? It's the same thing about yourself as a leader. You may be fantastic with the ideation, but you may be absolutely useless in client acquisition or the financials. What I've seen there is, oh, I don't know enough financials. Oh, you're a very good financial person. Why don't you talk to the people who are funding you? Result is, you look like an absolute idiot. You cannot be that. You have to know enough to be able to fake it, to know that, I know enough about it. I know what I'm talking. If you don't know it, you have no business to be the CEO. You can be the ideator for the company. You have to have the honesty to know, do you have the ability to take that up? The other bit, which I think a lot of them lack, is the ability to communicate. You're a founder. You have to get other people to believe in your dreams. You have to connect with others, both with emotions and with data. You come to me as a financial person and you tell me some story. I'm not interested. I had one founder who said, I want to meet up with you. So I gave him 1 hour. He said, actually, I need 1.5 hours. I said, why? Oh, to share what we're doing. I said, I usually do a jury pitch in 10 minutes or less. And funding in Indian Angel Network, we have a short meeting, but the lead partners may spend a little more time. We don't spend 90 minutes just to understand the concept. I need to know whether I'm interested in it to take it forward. That 30-second elevator pitch is essential. Can you connect with me emotionally, with a story, and financially, so that I know whether I want to be with you as a customer, as an investor, whatever it is. The other bit, which I think is very, very important, is as you go through the journey, do you have a trusted group of people? It can be a group of 1 with whom you can bounce off and say, what are the options in this scenario? So you have, traditionally you had the Young Entrepreneurs Association or organization. You have multiple kinds of things. And in TiE, we are thinking of creating a cohort for something like that in Bangalore. But the risk is, are you willing to drop your masks in order to seek that help? If you don't do it, somebody will have to, you need to be comfortable with someone saying, you're an absolute ass, you don't know what you're talking about. In this situation, you need to do this, or you may need to look at it like this. If you don't have the humility to learn from that, first you need to have a group of people, the trusted group. Second, if you don't have the humility to listen, it is going to be difficult. It's not that you can't do it. You will get hit at a later point when you may not be able to get that support. You need to cultivate it up front with people willing to offer. The last one which I'd like to say is anyone going into this space, it is important to know what kind of a person do you want to be. One of the most appealing entrepreneurs that I have met is the founder of ID, you know, the Idli and all of that.
dosa, better.
The kind of authenticity with which he spoke. I mean, he has been on the journey for the last 20 years. But the sheer authenticity of what he is and who he is and what he's trying to do for the customer, he doesn't pretend to be anything other than what he is. I think it's vital. It's absolutely vital, because otherwise you can do everything right, but somebody will see through you. And when they see through you, and this holds true for all my experiences, whether it's in the corporate world or whether it's in the startup world, you've got to be who you are at the end of the day.
Actually, your word has to be your action.
Absolutely.
You should be your word always in life.
Absolutely.
I think that will sail you through. It's a simple principle of life.
Yeah.
Forget anything else. I mean,
So,
you believe politicians who are closer in that, right? Whose words are their actions. You don't believe everybody else. Simple as simple as.
So this is the key reason why investors always look for a team, not an individual.
Yep.
The lone ranger is very, very difficult to predict and to be able to coach and work. You need that bounce off of the pieces.
And it is okay to fail.
Yeah.
And there is nothing wrong in failure. Everybody fails. There is nothing wrong. Okay.
But failure is hard to digest in the beginning.
Yeah,
so that's
I
the
mean,
ego
that's
piece.
fine. That's perfectly okay. That's what you have to learn to accept yourself. I think going back to her word, you have to accept yourself top to bottom. That yes, this is what I am, this is what I can do, this is what I cannot do, this is where I need help. So it's perfectly okay to fail.
But then all of us,
Nothing
I've
wrong
shut
with
2
failure.
companies, no, nothing to show for it. Right? I've shut 2 companies with nothing to show for it. But the structure is much more important, right? And this is a very thing that I think we have to tell people. Entrepreneurship is for, you have to be, in that sense, an entrepreneur should be a selfish person to say, this is what I am going to get out of this journey, right? You are not doing it to get your name in Economic Times. You are not doing it just because somebody else got funding. In fact, there are lots of cases where I have told, it's a significant number of cases where I've said, please don't take funding. Run it independently. If you want to run this, get to a cash positive situation. It's a lifetime business. Run it to whatever scale you want to grow.
That's our next question, funding.
Sorry,
So, yeah.
one small point. I'm sorry about this. I want to introduce the concept of blind spots here, right? Especially for the people, the youngsters here. The concept of blind spots. We all have to first realize and recognize that we don't see everything when you see a situation. There are areas where we are completely unaware of. Others could spot it when they look at us, but we are not spotting it, right? What am I
Spot
missing?
on.
The important question to ask is, what am I missing, right? Given a situation, what am I missing in this? What you see is what you see, but what you don't see is, in fact, your decision's success depends on whether you have seen everything, right? Or are there blind spots? Because blind spots are the ones that make a decision wrong, right? You did not consider a particular aspect. So in order to see everything, you need to seek. You need to ask. You need to ask people explicitly, what am I missing? And now that's a little more than active listening, right? There is not listening, taking all on myself. There is listening when someone speaks. There is asking people to speak so that I can listen, which means I am ready for feedback, and more I am looking for feedback on specifically where I am going wrong, right? So that's where the concept of ego comes in. That to me is the deepest level of getting rid of your ego, right? Don't tell me where I'm wrong. 1, 2, okay, if I'm wrong, tell me where I am. Third, tell me where I'm going wrong, right? So that is important. So what that means is your listening. People, when I spoke to someone, they said, I see you got very good listening skill, right? Listening is treated as a skill. So we need to build that. That's one. Last point, if you don't mind, tenacity to stay in power. If as an entrepreneur you have not seen personal financial difficulty, your journey as an entrepreneur is not complete. Are you able to take personal financial difficulty, fight through it, and get out of it? That defines the level of tenacity that you have. And that comes to the point of why am I doing this that you mentioned, right? Do you really have it? It's not just curiosity, there's a lot. Are you willing to live and breathe your business?
Yeah.
So I think, right, so sorry,
It's a whole laundry list, but I think you need to go back.
But very important for the entrepreneurs in the audience. But the issue of funding has come up a few times. So my next question for all of you is VC funding increasing in the fintech sector, irrespective of the ups and downs of the cycle? How should a founder manage investor relations? We've heard a lot of other discussions in other forums on how there's too much pressure coming maybe on the founders, or the founders don't know how to assess investors. So how does this whole thing come together based on your own experience?
So answer the first question, is a lot of funding coming in? I mean, that to me is seasonal and situational. Last year we saw so much funding that the market was flooded. Now all of a sudden within almost a month's time everything shut and people said that there's no more funding, etc. But the way I see it, if you are a founder or if you are an entrepreneur and if you are true to your business, right, you always have an investor. That's my take on it. I would say, are you looking at your business genuinely? Are you looking at acquiring a customer to whom you provide real value? Are you solving a real problem? And are you solving the problem in most efficient way? Are you projecting with with all the assumptions in place? The reasoning for why you are making your projections. What could derail your projections? If you are able to present it within all genuinity, all investors would definitely say they invest in the people, right? And why do they say that? Are these individuals true to what they have taken up? Are these individuals going to be able to pivot if the market changes tomorrow, right? What are the core reasons why they are here? If the answer to these questions are positive, there is always investors for you, right? You may not command great valuation when the market is great, but you will also not command very poor valuation when the market is bad if you stick to the fundamentals. If you are able to show genuine customers, active customers who are actively transacting with you, right? If you give genuine projections with enough information surrounding your projection and a lot of conviction into how you are going to make those projections come good, investors would always fund. At the end of the day, what is an investment? Me betting my money on you, right? Investors never intervene in the day-to-day activities of an entrepreneur. If they did, they see the fundamental mistake in that. What does it mean? They're literally betting on the entrepreneur and they're trusting their money as if they would themselves value it, right? So if you are as genuine as you can with your endeavor, you will always have investors for you. It's a matter of time, I would say.
Yeah, I think funding is a very, very important aspect which not many technical people are really used to. They think that it just comes as it is. It doesn't come as it is. There's a lot of hard work in it. I think people have to understand that, number one. The number two aspect is that they should plan for it. Most of them, they don't plan for it, especially people who come from the tech side of it. People who come from the traditional business houses and business backgrounds, they kind of understand some of these things, especially like what he was telling about cash flow. That's why there was somebody who was telling that North Indians are a lot more successful than South Indians. But anyhow, there is too much of a generalization in that, so let's not go out there. So the question is, please plan for it and don't underestimate the work involved in it. Those are the first two set of advices. The second set of advice is don't build a plan or a business plan for the sake of investor. Build a plan as to what your business needs. Okay, I need 5 crores today, I need 10 crores tomorrow. No, the investor wants to exit, so I have to give him a 3x multiple some or other. So don't do that, please. Okay, if you do that, you are faking it. Look that you are representing your business model and your business expansion plan and your unit economics the way they should represent, and ask genuinely what you want and ask for a genuine valuation. Okay, yes, there will be some investors who will try to poke you. It looks as if you are being poked, just take it with a pinch of salt. Yeah, I mean, somebody will say, no, you should not do this, you should change this, you should look at that. Listen to them. If there is a merit in it, adopt it. Otherwise, don't change your path just like that, just because an investor is asking you, and then for the next investor, change your deck and then go. Yeah. Don't try to change your dress for every movie, please. Okay. Be a natural actor, be a good actor, and then go and present your business case. I think that's the second thing I would say. And then the third thing is, you should know when you are Series A, when you are Series B, when you are Series D ready. If you are not Series A ready, don't go for Series A investors. So classify the investors, who are the guys who are in my space, who will be ready to put Series A kind of a money or a Series B kind of money. Don't waste your time running after every investor whom you find in every conference. And look for those investors who have invested in adjacency spaces or in your similar space, who are genuinely interested in your sector or in your theme. Okay, so don't generally think that just spray and expect that things will happen. It will not happen like that. Sorry.
Ravi, in your case, you're on both sides. You've been on both sides. So.
Both sides. No, on the funding, as a VC now more than anything else. So first a few stats, because we talked about what is happening in the market. Right? I'll not talk about the funding level. I'll only talk about what deal flow we see, because that's a good criteria. Earlier, we probably would see every month we would probably see about 100, 115 deal flows hitting our CRM system, out of which a good 50-60% is not meant for us, right? Which means that they have not spent time to even look at our thesis. They have not figured out who we are. They don't know what our size that we do. They, things that are just almost like equivalent of a spam, right? So in some ways, it goes to a spam folder, right? It's important to understand, to go and figure out what stage you are in, where you want to look at, what's the kind of people that you want to look at, right? So just to give the stats, out of the 100, so earlier it used to be about 100, 115. Now it's kind of come down to about 80. But the good thing is, post your review, that number has not changed so much, right? That is still about 40, 50 that you will take a look at and say, hey, I want to look at this, go in, do a bit of poking that we talked about to say, am I going to look at this? Is this something that is sustainable? Fintech or finance, insurance, insurtech, that whole fintech still constitutes a good 30% of what deals we get, right? Just to give you the feel, that has not dropped, right? It still constitutes a good 30%, which means that out of about 15 that you would go in fintech specifically, out of the 40 odd people that you shortlist, we probably will not do more than deep dive in 4 or 5, right? And it's probably our specifically on fintech, not that we started off at that, we have ended up having an inordinate number of investments in fintech. That is because we have found that they are worthwhile for us to take a look at it. So we've probably done one investment in every 2 months when it comes to fintech, right? Which is still very good in the overall piece. But to get there, if I were to put myself on the other side, what is it that people don't? They don't do enough study of who you are going to ask for what kind of money, right? What's your target market? Just like you do a market search, you are expected to go in and spend a bit of time with who you are going to meet through, how am I going to work through. The second one is, I find a lot of them have really not thought through and done enough market study, which irritates me to no end. If you are doing this, you are asking somebody else to put some money. Have you gone and spoken to at least 20, 30 people in the market? They could be VCs, they could be other entrepreneurs, they could be your prospective customers, they could be people on the field. Whatever you say your target market that you are done, you're looking at. I find people coming in with very, very small sample that says, I have spoken to 3 people, I think this is the problem. Those 3 people do not constitute what you want to be able to do. And then it's an unfortunate thing, because for some reason, we don't feed that, we don't have enough people who are going and doing that market piece on the ground. Whether it's a phygital model, whether it's a pure digital model, how many people have you spoken to? What's the net piece? You'll find that very strange, right? Because if I am an entrepreneur, I want to talk to as many people who can validate my idea before I go in and go through, right? The third one, I mean, I'll stop because I think a lot of it is already covered, and I know Sandhya will cover a few more, is we usually are the first institutional check. If you have not been able to convince an unknown, not a friend, family, a third person to invest in you, I don't know if you can convince me. There's a reason for this, right? Because at a funding process, an entrepreneur is first and foremost a salesperson, has to sell the vision and sell the ability to go back and deliver to that vision, right? To me, I will always value somebody who's got an unknown person, convinced an unknown person. It could be IAN, it could be, I was part of IAN for a long time, it could be anybody else, but has convinced a third party to come in and put some money. I don't care about valuation, right? I don't care about what rights they ask for. Have they actually parted money? And it should be not my brother-in-law, not my father-in-law board, right? It should be somebody who's gone in and done some bit of piece. Because in my mind, where would you go and ask for money first? You're meeting, you think there are people, I should be able to convince you, right? If you're really serious and you have that real dire need that is heartfelt, you should be able to convince, right? Very, very simple checkpoints that they have to hit to that. But I think those are 2-3 points that I find. Not enough doing due diligence on your investor, not actually doing market diligence, and third, not being able to convince a third party to put some bit of money. The best way is get me a customer who's put in money, right? To me, that I value that higher than even an angel investor putting in money, right? If you have a prospective customer who said, I will pay for this, man, you are 3 notches above, because you have ticked number 2 and number 3 with somebody putting in money. The market validation and the validation of actually somebody investing time and money with you.
Got it. Sandhya, what are your thoughts? How founders should understand and manage investor relations?
I think I'll wear the hat of an angel investor, and that's what I typically wear when I talk to any startup who's kind of building out their plans. When you're going to, and we're all from either IAN or Mumbai Angel Network or whichever other variant of it. First is, how strong are you? What do you bring to the table? That part is absolutely vital. If you need to believe in it, you need to be able to make the other person believe in it. Do you have your founding team who have complementary capability? If you do not have people on your roles, doesn't matter. I came across one chap, and I actually introduced him to a whole bunch of people. He was able to have a list of advisors who were like who's who have actually given him advice. It wasn't that he had just written down their names. You could see the value of the input in the solution that he had created. And that should be tangible when they come to talk to you. So therefore, the founding team or the support advisory group is absolutely vital. The second bit is, whatever the problem or opportunity that they are working on, is that something that has heft? Will it have longevity? Will it make money? At the end of the day, I'm putting money. So it may be a fabulous idea, but if I don't think it's going to make money for me, and I might be totally wrong because I have a certain risk appetite, maybe Ravi will have a completely different risk appetite for that same type of a solution. But that person needs to be able to convince, if they're coming to me, that it is something worthwhile investing. You will get a return on investment by X, Y, Z timelines. The other bit, if I'm looking at it if I'm bringing that presentation to whoever they're pitching, Ravi is spot on. You need to know who your potential funders are going to be. You need to, in today's world, you have enough research. If I'm going to meet Ravi, I should have read about him, seen what he's done, find ways to connect with him. I know your grandfather's great-granddaughters, somebody. And he may not know them, but he'll feel, oh yeah, somebody known. It is vital to do that. Oh yeah, your nursery school teacher was also my nursery school teacher. Doesn't matter. If you do not know how to find those linkages, the ability to connect is not there. And that person does not have the business acumen to take the business forward. They may be fabulous in everything else. They are not going to be the client acquisition, and they don't have the business acumen, to be honest. That's a vital element. Second bit is, even for bootstrapping, were you even able to convince your father-in-law to put money in it? The bottom line is, if you have not been able to run your business even for a short time, it's okay. Have you got some way to get that money? I've seen people say, I moonlighted and got this much money, I did the next piece, I did the next piece. That's fine. But what's your bootstrapping capability? In that context, a few things. Today's world, easy to do. Understand what a term sheet is. Understand what commercial terms will get discussed. I mean, you just need to watch TV today. You don't even need to do any detailed homework on what will they ask. Do you understand the difference between equity money and, if you get a loan from the other person? Do you understand those fundamentals? I think this has been touched on by everybody, the financial acumen. They need to learn it, because you cannot get into this area without having some basics of finance. But the last one, which I find is fascinating, because out of a few of the startups I'm involved with, they don't understand the legal structure. A lot of people, and I'll give you a couple of examples. There's one person who's created a fantastic database based on which they've done a whole bunch of things. But it's a for-profit entity. They haven't got a business model enough on. Theoretically, they have the business model, but they're not getting the customers because they have to make a massive shift in the marketplace to make that happen. So result is, you can possibly get money through grants, but your legal structure is not geared for grants. So which means you are not really, everyone says, yeah, I'm willing to give you money. Government says yes. Major houses, the CSR funding says yes, but you're not getting money because you're not structured your entity for that business. I think these are some elements which are there. And finally, please, please, please work on the pitch. Like it or not, you get one shot with a Ravi. In that one shot, if you're able to get his attention, say, yeah, worth talking. It doesn't matter how you get the attention. For example, I was doing a jury review of a presentation that was done for the Kerala Startup Mission. And there was one entity, and I won't mention who. I was really impressed with the idea, because I genuinely believe it's a long-term idea. We kind of went after them to say, hey, come to IAN. They didn't do a good job with IAN. I mean, their presentation, they didn't really kind of make it interesting enough for the other funders to take it forward. Finally, they went to Mumbai Angel Network, and I was so happy. And I invested in them. The reason I'm saying that is, if you believe in the players and the funding, you can help them through that journey, even if you're not part of their inner circle.
Okay, so
I'll just add one point. To be fair to entrepreneurs, okay, typically most of them come from technical background, and they go to a chartered accountant to advise them on some of these aspects. Whoever is the nearby chartered accountant whom they know. Okay, and lot of chartered accountants are not familiar with the startup structures, the startup kind of raising funds. Many of them they are not aware of. The traditional chartered accounting circle in India. Okay, so I think there is a ecosystem gap in that. I won't blame the entrepreneurs for it, for a simple reason that they have got a problem. They are trying to solve the technology. They are trying to get customers. They are trying to get their marketing piece together. They are struggling with many things. Okay, for them this becomes an additional burden. Of course, here we are not. We need not paternalize them, but the fact that he's an entrepreneur, he has to struggle. But I think there is an ecosystem gap which has to be addressed out there. Okay.
I would probably have a different view on that. When you choose to become an entrepreneur, it behoves you to develop that competence. And I'll give you my personal example. I've been in the banking, non-banking financial system. I've been involved with startups in that ecosystem, all of that. When I actually got out last year from the bank, I went and enrolled myself in an entrepreneurship program in IAM, Indian Institute of Management, Ahmedabad. And the reason for that was twofold. One was I needed a different network for startups. I had a very strong banking network, NBFC network. I did not have the startup network. I wanted that. Second one is I wanted to learn the language of how that is spoken in order to make it effective. If people do not want to invest in themselves, they don't need to go to IIM. They can land up going to even a YouTube video will give you that. If you don't make that investment, I honestly think it's very difficult for them to succeed.
No, no, it's not that they don't want to make the investment. It's just a question of so many priorities in their mind, okay, and where they spend their time and energy at the end. That's it. It's just that they're struggling in the initial stages with many aspects. So there is a genuine ecosystem gap there. Sorry.
So the ecosystem has come up dramatically in the last 10 years.
Yeah.
Right?
Now, yes.
I think there is enough incubators, there is enough accelerators, there are enough people who are going to work for the pieces. I may still not go to a chartered accountant for a very different reason. The whole concept of valuation and how I want to pitch my idea and what is the long-term growth, it's not part of their cup of tea. I think that's a very slightly different piece, right? But where it really, it is in terms of learning that Sandhya talked about is very important. People do not realize that when an angel invests, when she is investing out of her pocket. So it's enough for them to convince her as an individual, in your case, right? That's what I would do as an angel. But when you're going to a fund, you have to realize that
As a professional.
technically, my risk-taking ability is much lower than what I had as an angel, right? Because I, in the market, as a SEBI-approved Cat 1 fund, have taken money from other investors that we owe our primary responsibility to, right? I have to go back and make sure that I am doing justice to the money that I have taken. So my risk-taking ability actually naturally drops.
Yeah.
What I find that they look at a Shark Tank and apply it to, or they look at ET and apply it to fundraising. I think that is, I'll be very harsh, I think that is laziness, right? It puts me off because if you don't have the diligence to go back and look at some of these fundamentals, it's not as though you have to do an MBA course for it, right? This is a primary diligence process.
It was a 1-month program.
Yeah. So these pieces are actually red flags, and it is in the best interest that when somebody says, I want to take this journey, they have to show that piece, because them having not done these kind of check boxes, to me, I made a very strong statement. Calling somebody lazy is a very strong statement. You cannot have a lazy entrepreneur. Nobody will fund a lazy entrepreneur.
Great. Okay, my last question now. All of you have been in this finance, etc. space for many years. What is it about this space that excites you so much? Why are you in this space and not any other space? And how can some of the aspiring entrepreneurs catch some of your excitement and passion in this space? Balaji?
Me? Okay. So, so I started my journey in my career as a product developer in the banking space, right? That's how I got introduced to this space. So it was not by choice, but by chance that I landed there. But having landed there in the banking space, I've done a lot of transition within that. And I come a bit from a finance background as well academically, so that kind of helped me a bit. But I would say becoming an entrepreneur within the chosen segment is a choice. That was not a chance, that was a choice. And what excites me there is what I just mentioned in my earlier answer to an earlier question, which is the consistent level of learning and self-discovery that it offers you. One thing is for sure, whether you are a successful entrepreneur or not, whether you are a very rich person at the end of the journey or not, you are a very refined person with a lot of learning to talk about in all aspects. You will be a very well-rounded individual with a lot of learning across different aspects of life, be it finance, be it marketing, be it sales, be it human interaction and whatnot. Fintech space or payment tech space per se. See, in India, the payment space has been in rapid evolution, right? Since if you say like late 90s, early 2000, first thing first, the banking, all the banks got central systems, core systems. That's where the fintech and the payment tech journey started. From then on, there has been a constant push from the government, from the finance ministry, from the likes of RBI to scale up the ecosystem. That's something you don't find even in many of the Western worlds, right? So it's been a very exciting space where you could always innovate, bring in new product into the market. There is so much that you could research and understand, and Indian customer is very dynamic, very forthcoming in trying out new technology and giving a upright feedback to it within a short span of time. You're a success, you're a failure with your product within like 6 months time, So everything is like fast moving, agile, and that makes this space a lot more exciting than I would probably think of any other space. Like for example, if we took insurance, right? I would say payment tech is like much faster than, for example, even insure tech, right?
Yeah.
So the most exciting space to be in that sense. You keep always moving. There is no laziness in this space that you can even think of. You are like out within a matter of few months. So that's what excites me. So if this is something that excites you, then this is the space to be in.
Great. What is your passion?
No, my passion is, I think India is at the cusp of a growth, okay, from a national perspective. So one of the main engines required for that is the increased speed of flow of money, okay, and democratization of flow of money. Okay, I think till now the flow of money was not really democratic in that sense of the word, both in terms of discovery as well as in terms of sourcing and funding and things like that. I think fintech helps that in a big way, and that will accelerate the growth of the country. That's what excites me. For example, there is a $300 billion need for lending sector to be furnished. Okay, there is 75 to 80% of the insurance market still to be addressed and provided for risk management and things like that. So there are, and of course, if you look at the intersection of other sectors like agriculture and finance and real estate and finance, I think there is a whole lot of things to be done there. But of course, it takes time. It's not going to happen overnight. Okay, it's a probably 7 to 15-year journey, but there is a potential of at least $1 to $3 trillion to be released out of that. And the more the money starts moving around, the more the economic activity and the higher will be the GDP growth.
So with the caveat that fintech is not the only one that we invest in July Ventures, I make this big caveat because we talked about so much. But I'll build upon what Ramakant put out, right? So very structural things. We in India, from a nationalistic piece, talk about demographic dividend. Unless we put this kind of core infrastructure, and to me this is a very important aspect that I don't think people have understood. Finance or fintech is soft infrastructure that gives you a multiple return on investment or a leverage of multiple times. So if you, I don't know if you saw the budget piece, it talked about every rupee that goes in to a capital investment is supposed to generate between 2.5 to 3.4. We can argue whether it's 2.2 or 3.4, but there's a leverage. But everything that goes into a subsidy expenditure doesn't give you that leverage. And we're talking about hard infrastructure there. To me, the finance is soft infrastructure. Every dollar that we put into that, or every rupee that we put into this as an economic action, I believe will generate at least 3, if not higher number of multiple for the country from a GDP perspective, right? And all of whatever we are talking about as growth, whether it's the GDP growth, whether it's the consumption growth, internal consumption growth, whether it is the demographic dividend, whether it is the number of people who are going to come up into the salary market, the middle income group rising, and all of that is going to be on this basis of this soft infrastructure. And to me, that's the biggest thing that I think we can think of from an investment perspective. So that's a very holistic answer, but that's the core of what it takes place. The second one is I can do this change without having to wait for 7 years, 10 years like a hard infrastructure. I can make this change happen in less than 18 months, right? Provided everybody approves whatever else, but the change, the rate of change that I can build up on is unheard of, right? So not only do you have the leverage, but you start seeing the leverage come into play in less than 2 years. That's fantastic ROI.
I think a couple of things that truly make me want to be part of this journey. The size and scale of impact for the industry, and there are published numbers around it. I'll just pick 2 numbers, and it can be, like Ravi said, many of them can be debated, but the reality is you're looking at an addressable size of about 1.2 trillion or something for this area. You're then not even counting the adjacencies. The revenue which you expect in the next 8-10 years is about 200 billion. We're around 55 billion at that. So which means you have in the next 7 to 8 years, the potential for growth in this area is humongous, and it is democratized. It is not in the hands of the few, it's in the hands of the many. I could become the next Zerodha tomorrow if I find the right opportunity, solution, and drive it forward. There is no entry barrier for me to jump into this space today. Provided, there are entry barriers of how you run a business, all of that, but potentially nobody can stop me from getting into it if I have the skills and the capability and the drive. For me, what is even more important is, it's unless you do this, wealth creation cannot happen in the democratized fashion. You're seeing people who are in this field who are first generation college goers with ideas which are incredible, which means the country of tomorrow, in the next 25 years, we spoke about the budget of Amrit Kal. This is the space from which you generate wealth. You need about 1.3 trillion for your ESG compliance by 2070. Can you create enough wealth that you can do so by 2047? 2147? It is essential. And this is one of those industries which has the potential for doing it. And it can be done across multiple areas. You can use deep technology to go at it, because I love technology, so I can go through that. I love agriculture, I can go through that. I love the financials, banking, whatever it is, I can go through that. So the opportunity to get into this space from different points is many. The advantages and the value is many. And I hope to be at least a small cog in the big thing to support it in whichever form it is, whether it is through mentoring, whether it is through partnering with people who have the funding capability, or working with government to say these are things that we can change. I think we are in a very, very fortunate spot in India and for the world to have that. The young people who are watching this program today, they have the ability to change the world, even more than any of us sitting on this panel. So I think that's what really excites me about this space.
Yeah,
Just one-
sorry, Ravika, we seem to be jumping in.
Yeah.
So on the youth side, right? While we talked about the fact that we don't teach them about finance, we don't teach them about a few of the other things in our educational institutions. There's a whole lot of other activity going on, right? So, for example, we're working with an entity called Co-Create, where I'm an advisor, where we are introducing entrepreneurship in year 2 of engineering, based only on one factor, that in most cases, they come out, look for a job, and then think of entrepreneurship. We want them to be job givers at the time they pass out. And that 2 years is more than enough in our minds to figure out whether you have a product market fit, right? That's all, that's a fundamental. Obviously, you build a whole other set associated with that. But if you take the force multiplier that I was talking about, and you create a fact that this doesn't need investment on an infrastructure basis, right? I can't think of anything else where you can go in and work through, right? Because this is completely getting built out as we speak. And this is where innovation is happening from a digital public good infrastructure piece, of whatever we have done. right? Whether it could be the account aggregator model that we'll have. So India will probably have the first working account aggregator model that will have
Effective.
X number of million people, much ahead of
Anybody
UK
else.
or anybody else in the world, right? And to me, that's a fantastic process to be able to go back and say, I've done that. It's as big as COVID if you think about it.
Even bigger in some ways.
Yeah.
If I were to just build on it, sorry,
Please, please.
as part of the TiE Bangalore FinTech team, one of the things which we have done is we are working with a couple of institutes, business schools, to help us do a bit of research. And I was sitting with one of them yesterday. 3 groups all came up with ideas for agri-fintech. First year students. And the understanding that we have is they will keep creating something like this every quarter. Some of them may choose to kind of work on it and take it forward. What is still missing to my mind is they need to focus equally on creating IP. India is not doing enough around creating IP in the fintech area. If you look at the data from the IP database, if this is supposed to be the size and scale of the industry that we are working through, IP is not strong enough for that. We need a lot more. We need to get ahead faster, including quantum computing. If you look at the stats globally, they are ahead of the curve. If we don't get on top of that soon today, tomorrow you'll have to be kind of buying the IP from somebody else to do your work. That's not a good thing for us. So opportunity there, but there's also a lot of work that we need to do.
Yeah, Rampreet?
Yes. No, I was just looking at, see, there are approximately 6 crore MSMEs in the country, out of which I think last year 60 lakhs closed it down. Those 6 crore MSMEs provide employment to 15 crore people. Okay, if through a little bit more easier access to finance, even if 20 lakhs of them could have been saved out of 60 lakhs which disappeared, we could have created 40 lakh jobs straight away, 40 to 60 lakh jobs. India today needs to create 1.5 crore jobs every year. Okay, and we are probably somewhere around 40 lakhs. We are falling short by 1 to 1.5 crore jobs. What is 1 crore jobs every year in terms of creating the employment ecosystem? So there is an absolute need not only to empower the white collar graduates, but there is also a great need to empower the normal Joe whom you find on the road.
Yep.
Okay, who is doing a 25,000 rupees business, 50,000 rupees business, 70,000. There is a huge need to do that because they are the guys who can really uplift the economy. Just.
Great, thanks. On that note, we come to an end of a very inspiring and insightful session. Once again, thanks to all of you for joining the TiE Bangalore Charter Member Roundtable Series powered by YourStory. Thanks again for joining us. Do connect us with us online, and let me once again thank a big standing ovation for our speakers, Sandhya, Ravindra, Ramakant and Balaji. Thanks once again and stay in touch.
Thank you so much. That was a lovely way
Thank you.
of
Wow.
finishing it.
Yeah, 2 hours.
We just finished the FinTech Roundtable for TiE Bangalore. That has been a real fun session, a lot of enthusiasm and a lot of passion for what we want to support the industry and the ecosystem. We have people who are involved with funding, people involved with being startups themselves, as well as mentoring and providing any other support that's possible. I genuinely appreciate what we have here. It's a good group of people who really want to grow the ecosystem. Join us at TiE.
We just completed the TiE session on FinTech. I think, hey, Lakshmi. Oh, I can do it. Okay, all right. Okay. Yes. I have been a TiE charter member for a long time, and we just concluded the series where we would do deep dive in multiple areas, and we just finished the one on FinTech. And it's been amazing just to sit through and look at it across the various areas that Madan of YourStory kind of guided us through. So I think I'd like to thank the whole team, TiE and Madan. From a entrepreneur perspective, I think this is a great overview. So if you think that you're passionate to follow an entrepreneur journey in the finance, fintech, insurtech area, I think this is going to become essential learning for you, at least reading. I'm sure we are going to be publishing this out, so do look out for it and participate. And beyond that, I think as part of TiE, we are happy to help provide this support, because we believe that this is a huge opportunity for everybody in the country, and also for India to make a name in the world economy.
Yeah, so today I got the opportunity to be part of this panel discussion on fintech entrepreneurship, of course conducted by TiE Bangalore. I'm a charter member of TiE Bangalore, and being a charter member of TiE Bangalore, it's been greatly beneficial. I could see that there's a global community where I could have access to fellow charter members across the globe. So it's been personally greatly beneficial to me in that context. As far as today's session go, I'm always keen to understand, always keen to listen, always keen to learn. So in that context, I could learn quite a bit, hearing from some of the leading minds in investments, in funding, in equity space, and with similar experience and exposures in the fintech space. I hope it was also useful for all the audience to today's session. And it's all the best to, I share my best wishes to all the entrepreneurs and budding entrepreneurs who are actively working to build the economy and the nation. Thank you.
Understand a lot of perspectives on the fintech space. The panel was very good, and TiE has been very active over the last couple of years, okay, in conducting very thematic focused discussions and conferences, which will be pretty useful for the younger generation, younger set of entrepreneurs. I wish TiE great success and many more such events. But I think TiE has been doing a great job, and wish many more join TiE. Thank you. Bye bye.